Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri's pot of gold at the end of the rainbow. Scott Brown. Good afternoon, Scott.
Good afternoon, and my green for you today.
All right, we're going to talk weekly livestock slaughter numbers, consumer sentiment, and retail prices, and end up with a big report today, which is the cattle on feed numbers. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, we actually saw lower live fed cattle prices this week, down about $1.10 on the week. On the feeder cattle side, we were steady to $1 higher. Some instances, a 2 to 3 higher this week. When you look at future side, April live cattle futures contract down nearly $1.90, and the April feeder cattle contract down nearly $2.90. May corn was actually up 16.5 this week, probably contributed to some lower feeder cattle prices. On the beef side, choice box beef down $1.80 this week. Both rounds and loins kind of led the way lower this week. On the hog side, cash barrels and gilts were 30 cents lower this week. Those April live lean hog futures contract down $7.40 on the week. Tough week on hog futures as some noise about ASF in the U.S. certainly caused at least one limit down day for us, unfounded to this point. The pork cutout value down $1.40. Lower hams and bellies led the way in terms of the components of that lower pork cutout value.
When we talk about that, obviously unfounded at this point, but we know what happened when ASF was found in Germany and other places. How much does I guess really the globe responded to that impact how we move forward here?
Yeah, so it's probably loss of trade if something were to happen here. I sometimes we always are on the negative side of this discussion. We are going to talk about a serious outbreak of ASF here, hurting hog inventories, pork production ultimately. So the impact at the end of the day really depends on just how much we curtail production as a result.
All right, let's talk weekly slaughter numbers. Walk me through what we had for both cattle and hogs this week.
Yeah, USDA told us a run of 631,000 head of cattle for the week ending March 18th. That's down 3,000 head from what we did a week ago and down 5,000 head from what we did a year ago. On the hog side, a run of 2.492 million hogs this week. That is down 5,000 from the run we had last week, but 67,000 head above where we were a year ago.
First report we're going to talk about this week is consumer sentiment. Take me through these numbers because this is really the first time in quite a few months we've not had at least a small uptick.
Yeah, that's right. So first time in 4 months, we actually fell month on month. The overall index of consumer sentiment down 5.4% from March of this year back to February. However, that's still 6.7% above where we were a year ago. So it depends on your point of comparison here. Certainly, I think highlights that is general economic volatility continues to be in front of consumers that has really dampened, I think, their outlook for overall consumer sentiment.
How much are we watching that in terms of demand? Thinking about, obviously, we talked briefly about this earlier in the week in our webinar, focusing on risk protection on the cattle industry, but really the larger economic picture, knowing what happened in California and some of the risk that's going on there.
So I think it just adds to the uncertainty. I think everybody kind of pulls in a little bit and is more cautious as they look ahead under these kinds of events like the banking events that we see continuing to unfold. Today was another less than stellar day for many of the bank stocks on Wall Street. So I think it's only adding to the uncertainty, even if we don't realize a big general turn down sometime this year. The uncertainty has consumers at least pausing here for a second.
Retail prices out this week. Not anything too exciting when we take a look at those numbers.
Yeah, so I think when you look at the overall beef and pork retail price indices that we got for February, of this year. I go not a lot of big news there, small changes, one up, one down slightly relative to the previous month. However, when you start to look at some of the individual components, and I think this goes back to some of this uncertainty, bacon, for example, but bacon prices down 7.1% relative to a year ago in what we got out of the retail price report this week. Sirloin steak prices down 2.8%. So maybe a little bit of buy down starting to happen when you look at ground beef that's only down up 3.2% relative to a year ago. Tells a little different story. Pork chops that are up 1% relative to a year ago. Just reminding us that the mix of products is, I think, changing around a little bit as we think about some of the economic uncertainty that we face today.
Scott, do we get nervous about you talk about buy down or swapping out, but specifically knowing we're seeing poultry prices pull back a little bit at this time? Does that put a little bit more competition or give beef and pork a little bit more competition at the grocery store?
So probably, and I think the competition doesn't occur across the board. I always say I think the best steak prices stay high. I think of a subset of customers that are consuming those highest quality steaks probably aren't as income dependent as some of these other products. So are we seeing some buy down in the lower quality? Yes. And could we switch from more expensive beef products I expect to see later in the year to cheaper chicken? In some cases, I think that certainly could be the case. We'll have to continue to watch, but I think it's harder to have this across the board. Well, we're going to switch from beef to chicken. I think it depends on the components that we're going to talk about, what kind of switching possibilities might exist.
Because I'm sorry, if I want to stay chicken, a chicken cutlet is just not going to cut it if that's what my intentions are in the long run, right?
Yeah, I don't remember the last time we talked about a T-bone steak out of a chicken.
Chicken wings are are a whole different story, but I think that's an intentional purchase, right? That's not a swapping out situation.
Yeah, and I think we're wise. And again, I'll say, so we talk about this from a grocery store perspective, but we often are consuming that meat away from home. And I always say I don't go to Texas Roadhouse for a good piece of chicken, just like I might not go to, I don't know, you name your chicken place to
a wing
have
shack
steak
somewhere.
Yeah. So I think it's important to know that restaurant choice ultimately determines what kind of meat I have on that plate most of the time.
Big report today, cattle on feed numbers. There's some interesting figures as you take a look at them at first glance.
Yeah, so for sure, Megan, we continued to talk about tighter supplies. So March 1 cattle on feed inventory down 4.5% relative to year ago levels. So we're continuing on that train of 4.5% to 5% lower. When you look at where we sit, you look at the graph and we just are tracking 2022, but lower the same amount every month. When you look at cattle placements, we came in 92.8% of a year ago. So placed in February continues to be showing that same trend, 134,000 head less cattle placements in February relative to a year ago. I mean, all in all, Megan, it just continues to tell us we're going to keep getting tighter in terms of slaughter ready cattle as we get in the second half of 2023.
As you take a look at these numbers today, how does that set up Monday and next week's trading? Were we anticipating these? Is it outside of where pre-report expectations were in comparison?
Yeah, so all in all the numbers came in within pre-report expectations. So not huge surprises. The biggest biggest difference relative to the midpoint of those pre-report expectations was placed on feed in February. The average pre-report came in at 93.9 and the actual came in at 92.8. So actually, a little below. I don't expect big market moves Monday morning. Having said that, we'll probably get big ones, but I don't think this report generates anything too big in terms of moves. It's just further confirmation that we'll get tighter as we get later in the year. When you look at the by weight categories of placements, a majority of the decline is in the lighter weight classes, which won't be slaughter ready for a few months here.
That's really it for us today. As you look ahead to next week, what reports will we be talking about?
Yeah, we get 2 out next week. Both livestock slaughter and cold storage will be out on Thursday and give us something to talk about at the end of next week.
Well, hopefully there's an added pot of gold at the end of your rainbow there as well.
Let's hope that continues to happen, right?
All right, Scott, it's always great to see you. Thank you again for joining us earlier this week as we talked about livestock risk protection as we continue our series with the National Cattlemen's Beef Association, the bottom line on Brownfield. You can check those videos out via Brownfield TV to find out what's going on with the markets every day. Make sure to check out John Perkins' Market Minute and to have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. That's it. And click subscribe and submit your questions and comments there. We're back on a Saturday schedule. Last week was wild with Commodity Classic and everybody going every which way. So it took us a little bit longer to get everything out. So glad to be back to a more normal schedule.
Very good, Megan. Have a great weekend.
You too. We'll see you next Friday. I'm Megan Grabner for Brownfield.